Hey, this is Justin with DayTradeTheMarkets.com. On Friday, August 23rd. We had huge rallies in several markets today, but we had almost a 3% rally in silver, almost a 2% rally in gold, and then we had the ES for comparison that was, relatively speaking, pretty choppy. And so I wanted to look a little bit more in depth at these markets and then talk about really what we think to be the number one clue that is the first sign of a potential breakout versus a choppy day. Okay, so to illustrate that, let's go back to, just for example, the gold chart. So the clue I want to talk about has to do with specifically level 3, or what we call extreme buying and selling aggression bars that happen on the high or low of the day, and whether there's follow through. And just as a review, kind of the first building block of our software is what we call these relative aggression bars. And these are looking at the order flow and making it visually easy to make sense of, not just raw data, but visually easy to make sense of, so that you can see, number one, which side, buyers or sellers, is more aggressive at a given moment, and then number two, not just which side, or not just raw, but to what degree that domination is happening. Is it moderate, is it strong, or is it extreme? And we really want to focus on these extreme and strong, these level 2 and level 3s. And we've got a lot of other evidence, support resistance, filter, deceleration, that sort of thing that goes on our software. But for simplicity's sake, with this video, I just left on our level 2 and level 3. So don't even have the level 1 bars on there. And so you can see here in gold, what I think the biggest clue to look for a potential breakout is when you have a level 3 or extreme buying or selling bar on the high or low of the day that has follow through. Okay, whenever there's an explosive move, it's not 100%, but it's probably about 98%. Whenever there's an explosive move to the upside or downside, it's going to begin with a level 3 bar. That doesn't mean every level 3 bar leads to an explosive move, but it's rare that you're going to have an explosive move that did not start with a level 3 explosion or a level 3 extreme aggression. And so what we like to look at is during the day, look at the high and low, and you can see early on here in gold, this was the low of the day, and we got a level 3 selling bar on the low of the day. Okay, so that's on the low of the day. Do we have, can the high hold, and do we have follow through lower? If so, it's likely to head to the downside. Now, with a little bit of context, if we just go back in time a little bit, you can see that yesterday, this is where some really strong buying came in off of this area right here, is where some really strong buying came in, and this is where the market basically petered out a couple times yesterday. Support zone from yesterday, which you could carry over. So this support zone here is basically right here. Okay, so that's where this level 3 selling aggression bar is occurring right there. So we want to make sure there's really some follow through. The fact that there wasn't is what we call a red flag. It's our first sign that when the high of this bar could not hold, and then the market accepted price above this level 3 bar, that's a pretty good sign this market might be wanting to head higher. Then you can see, on the high of the day, basically at that time, we'll just call it this for now, officially it's really right here, but you can see that this time on the high of the day we had this level 3 buying aggression bar. Its low certainly held, and the very next bar its high was taken out. So again, rejection down here, breakout up here. Pretty good sign this thing wants to take off higher. Is that going to mean it's going to lead to an explosive move every single time that happens? No, but it's a very good clue. You can see the very similar scenario here in silver, which actually had, relatively speaking, a bigger move. So we tested yesterday's support a couple times. No follow through, didn't even have the selling aggression on this one. Then you can see on the high of the day at that time, we got a level 2 bar with follow through, and then here's our level 3 bar. Okay, quick follow through with another level 3 bar. It's a very good sign that a breakout is happening. Now compare that with a choppy day today, like in the ES, relatively speaking. Okay, so early on, we did have the potential for a breakout. Here was our low of the day, and we had this level 3 selling bar on the low of the day, and you could see its high essentially held. We took it out by 2 or 3 ticks, but no full bars above, and then we took out its low. So pretty good sign. This is right at the new home disappointing news, right at 10 o'clock Eastern. And so you can see we did take out the low, so potential for a breakout, and it did sell off 2 or 2.5 points from that area. Now, the clue that this is coming to an end was we got this level 2 buying aggression bar that quickly had its high taken out. So it's telling us not necessarily that buyers have taken over, but this pure wave of selling it's at least a caution. And then you can see the market tested back up here, sold off another 3 points or so, and then finally made inroads higher. And then we basically just chopped around. You can see then when we made highs for the day later on. Now this is at the very end of a day on Friday, so you want to be pretty careful. We did do so on a level 3 bar, but again, that's right by the cash close on a Friday, so that's not something that you're going to want to, I wouldn't think, play around with. But that's the point of this, is just kind of looking at two different markets on a given day. One that was choppy, one, or I guess two, that really had strong moves, strong breakouts, very strong breakouts, and look at the idea of a level 3 on the low of the day versus a level 3 on the high of the day. Is there follow through on either one? When that happens, it's a pretty good sign that a pretty strong breakout is probably going to happen. So hopefully that makes sense. It's just like we said, our kind of our number one clue for when a market is, when you don't have, in other words, when you don't have a level 3 on the high or low of the day with follow through, you generally speaking need to be thinking about more of a consolidation type of a day. Whereas when you get a level 3 buying or selling bar on the high or low of the day with follow through, that's a vertical market, and you need to adjust strategy accordingly. And that's stuff we talk about. But that's kind of the first clue, or the number one way to determine. Is it 100%? Of course not. Nothing is. But it's all about increasing your edge, and it's all about giving yourself a better chance of success. And this is again, it's not 100%, but it's pretty solid. It's pretty strong. So let us know if you have any questions about that. And otherwise, everyone have a wonderful weekend, and we'll talk to you next week. Take care.